I'll start with a quick introduction about myself before we move on to our panelists. Basically, I 13 odd years of experience, spent over a decade specializing in payments. Currently, I'm a director in payments transformation practice in India. We broadly do payments consulting across from strategy right to execution, covering ops, technology, regulatory, and government support. Uh, my personal role here at PwC is to look at all our consulting business development and delivery across our network firms. So we do a lot of work for clients across the overseas, and also I focus on non-banks as a clear client segment domestically in India. That's probably a brief kind of introduction about myself. So we have a very esteemed panel. I think we've got a good mix. We've got an innovative private bank in Mr. Kashinath. We've got our domestic national payments operator who manages various payment rails, Mr. Nalin Bansal, and we have a leading non-banking fintech, which is PhonePe Deep, and we also have a full stack cloud native neo-banking technology player. Which is in Sachin. So maybe I'll give them 30 seconds each. We'll start with Mr. Kashinath, Nalin, Deep, and Sachin before we jump into questions.
Yeah, hi, good evening, everyone, and indeed a pleasure for me to join this, panel. By way of introduction, I head the payments and cash management practice within ICICI Bank, and which is part of transaction banking. And while I have been in the bank for about 13 years now, and handled diverse roles within the bank. However, banking is not something very native to me. I mean, prior to ICICI Bank, I was not a banker. So I have experience in other industries as well in the area of sales, marketing, business development. And within the bank, I have worked in multiple departments across retail, across corporate, across operations, so on and so forth. And indeed, my pleasure to be here. Yeah. Over to Nalin.
Yeah, hi, good afternoon. Thank you, Zubin, for getting us together. And I think just a short introduction. I work with National Payment Corporation of India, and I looked after RuPay and NFS business here at NPCI. So that's about it.
Deep, over to you.
Hi, good evening. I look after payments and banking at PhonePe. So everything to do with payments, whether it's UPI, cards, wallet, anything falls within my ambit. Look forward to the conversations.
Sachin. Over to you.
Good evening, everyone. My name is Sachin Ramchandani. I lead the business development team at Zeta. I've been part of the payments industry now for over 15 years. I've been at Zeta for close to 10 months now. At Zeta, our goal and objective is to provide modern banking experiences to banks and fintechs across the world. Super happy to be on this panel and look forward to the discussion.
Okay. Thanks, Sachin. So we'll quickly jump into, I think the first question is more for our audience to kind of get an understanding from each of your perspectives. So we all know the pandemic has impacted various industries. The payment industry is no different. There have been some positives, some negatives. So basically, I would like each of the panel members to kind of give their perspective on, how payments have got impacted. And also, basically, given the recent relaxations, where do we see the new volumes coming from? So, I mean, any views on that? Maybe we can start with Deep from PhonePe, followed with Sachin, Nalin, and then Kashinath.
Sure. So I think in terms of pure play transactional impact, we saw about a 10-15% kind of an impact initially from the Fed volumes to March, April. But I think what really was seen during this time was the fact that one area, so we offer payment solutions across use cases, right? So for consumers, they can make payments using PhonePe within app for their bill payments, utility, recharges, etc. For paying on online merchants or for offline merchants. And what we saw was while the lockdown was in full effect in April, May, the offline transactions obviously came down significantly. But the mobile recharge, the DTH recharge, the utility bill payments, they actually went up very significantly. So they actually kind of made up for the transaction loss on the offline side. And as the lockdown started lifting, I think the recovery was also similar, where we saw that the mobile recharge DTH percentage contribution kind of came down to a certain extent. And offline and online started picking up. Online was sooner because most people were trying to order through e-commerce sites. But in the recent couple of months, we've seen the offline transactions also come up very, very significantly. When compared to pre-COVID, we are at about 35-40% increase on a month-on-month basis. So, fairly significant improvement in September.
Sure. Nalin sir, so from you, NPCI, you're managing a lot of payment rails. So how would have you seen transactions change over time?
Yeah, so I think now there is enough data for all of us to consume to safely conclude the fact that online is here to stay. So of course for April, May, it was a very strict scenario for all sort of businesses. So everything went down by a large portion. But I think e-commerce bounced back. It has bounced back stronger. It is the growth has been relatively good. But the most important thing, and Deep spoke about that very briefly, is that the new categories have emerged in e-commerce. People who were not using certain merchants which were not available, or people were not using them on the e-com side, they have become suddenly more relevant, and it seems to be now staying. It's not that it's going down and they're going back to the regular ways. I think they are sticking to it. Of course, the physical payments have taken a hit. We're still about 80% of what it was during the pre-COVID times. But so strangely, I would say, and maybe not surprisingly, but the ticket size have gone up. So the average transaction size of what used to be has significantly gone up on the physical payment, which is both on ATM and POS. And that's understandable, because people are coming out less often and they're buying more in bulk. So I think that's the trend. But again, on the POS side, what we've seen, and we also saw during demonetization, the breadth has increased. So a lot of people who had these machines somewhere sitting in their drawer have come out again. So I think unfortunately, we need a COVID kind of a scenario for the breadth to increase, which is always good for payments, because typically you otherwise get limited to the top 8 towns, 10 towns. But such extremes, business scenarios increase the breadth at least. So people start using what is kept in the deep freezer for them.
Sure. Thank you. Any views, Sachin, from your side?
Yeah, sure. I mean, I quite agree with the views that both Deep and Nalin have shared. Mine are fairly similar as well. Honestly, I think the really big change that COVID has brought about is the realization that digital payments are no longer a matter of convenience, right? It's almost a necessity. And I'll give you a personal example, right? My own mother, she's a senior citizen, and someone who's as far removed from technology as anyone from her generation can be. Now suddenly all her grocery shopping and her veggie shopping happens on her mobile, and she's really addicted. And honestly, that's my personal barometer of measuring considerable change. If my mother can move, the industry can move as well. But speaking from the vantage point of Zeta, and we in sort of many ways work across a range of ecosystem stakeholders. So we partner with banks, we partner with fintechs, networks, developers, etc. And that really gives us a perspective on, of course, how consumer behavior is changing, but also how these entities and these enterprises are responding to those market changes in order to serve their own customers better. And so on the consumer side, there are two or three big trends that we are seeing. The first is an obvious sort of digital, where we are actually seeing new customers getting added to the mix. So these are new debit card holders, and I'm sure Nalin can corroborate this. New debit card holders, new account holders who are not transacting digitally earlier. The second trend that we're observing is a shift to essentials, and which is again fairly obvious given that household incomes have been impacted, and consumers are generally now more mindful of where they need to be spending. But interestingly, as Nalin mentioned, the definition of essentials is expanding. Right? It's no longer just limited to the everyday categories. For example, now you have categories like online education, insurance, work from home essentials, and work for home essentials. Right? Both of that, those are seeing an uptick. And the third big consumer trend we're seeing is the notion of zero touch and contactless becoming more prominent. Right. Of course, the key question is, which of these behaviors will stick and which ones are temporary. I think the general belief is that habits take 6 to 8 weeks to form, and so hopefully these will be in existence long enough to become permanent. On the enterprise side, which is where we sort of play, we're having some really, really interesting conversations. And what we are really seeing is a shift in mindset towards end-to-end digital and automation, right? A number of banks, as you might know, have launched a digital onboarding process during the lockdown period, right? Basically, obviating the requirement of a branch visit. Banks have rolled out video KYC or are in the process of rolling it out, tend to cater to a no contact account opening process. And so while there are concerted efforts that are being made by banks to modernize, and to be fair, these attempts have been made on a continuous basis even before the pandemic. The real difference that I see now is in the fundamental thinking of running bank-led tech versus a tech-led bank, right? And that means sort of thinking of technology from a first principles basis, evaluating modern, scalable, mobile-first, API-friendly banking stacks that will position them well as they go into the next.
Okay, great. Thanks, Sachin. Kashinath, sir, from your side, in terms of on the corporate payment side, do you believe that there's been a drastic change, and how has that spanned out?
Yeah, so just to summarize what my co-panelists talked about, time and again, this has come to prove that compulsion always triumphs, conviction. We've had multiple scenarios in the past. I think I heard Sachin say that also. We have seen a massive adoption of digital payments post the demonetization as well. This time around also, I think the reasons are similar and the adoption are similar. Uh, the point to note here additionally that I would say is that we would or we have already started a reversal to the mean, by which I mean that you know uh, once situation becomes normal, the cash starts coming back, and that's pretty much something that we are also starting to see at an overall level, because we have to understand that in India, despite the digital payment growing at maybe higher order double-digit growth, uh, cash is also growing at a CAGR of close to 15 to 17% over the last 3 to 4 years. So, an economy of our size, with cash growing and cash constituting a good upward 80-85% of the overall payments space, a growth of say 15-17% is pretty big in itself. So while pandemic has definitely knocked the winds out of a lot of players, whether it is people around the corner selling fruits, or large corporates selling cars and stuff like that, or education. So I definitely have seen a massive surge in the ask from customers, corporates of very large size, small size, uh, to kind of seriously take a look at digitizing. And what they have realized is that if you have a digital payment architecture in place, a digital supply chain, digital operations in place, then your ability to handle the non physicality, or the disruption, is much faster. So I think that's a very positive sign, and in general we have seen a good take up from the client side to go digital. That definitely has left a lasting impact. I hope the reversal to the mean does not happen very soon.
Sure, we all, I think, hope so
Yeah.
too. So Nelson, I know you needed to head out for something, so maybe I'll just target a few questions towards you first, and then we can follow the rest. See, one is I understand also DBT had a large volume spike, right, because of all the schemes that were rolled out by the government. Any specific lessons learned from managing this large scale direct benefit transfers to the needy, and anything that has helped make things better for the future for us? Any views on that point?
Uh, See, in terms of the DBT, I would say a trend. Obviously, because of the stimulus that the government has provided, to roughly about 25 crore people in the last 6 months, in terms of the breadth, there's been a lot of activity, and I think a lot of money has been pushed out to the bank accounts, and it has reached to the consumers. Now, it's a different question whether it's the right the right person or not. But the point being that the money has been transferred. There is value being driven. Unfortunately, two things have happened. One, so much has happened in such a short time. I think everybody was taken by surprise, and I think banking systems and then even the transaction systems were working beyond 24/7. I mean, I think it was a strain. So I think it's what everybody realized that when you have to go from X to 10x, you're not prepared, and that's what a crisis situation can bring in. So I think everybody started thinking about how the infrastructure can be prepared for a 10x kind of a scenario, and that is very likely to come. That's number one. Number two, the other unfortunate part is that almost 90% of that ended up into cash out, and which continues to sort of highlight the fact that while you might have with UIDI, with DBT and everything, you've sorted the the credit part of the story,
Funding.
yeah, the funding part of the story, but the utilization of still lies on the merchant side. And then and I think it's enough being said and done. Maybe initiatives being taken to focus on the merchant side. So there is obviously now the RBI initiative on the acceptance development fund. A lot of aggregators, PhonePe themselves. I think there are a lot of people who are now focusing on targeting the merchants. Where do you end up paying? I think that's a glaring hole. It was also evident during the demonetization time, the demon time, and it's evident even now. I think significant effort has. I mean, QR possibly has been the only savior to some extent, but the DBT has gone to people who are not on mobile apps. So I'm so point being there is the traditional acceptance mechanism has to be brought in. I think which is why all the schemes put together have focused very strongly on something known as soft POS. So you can convert your Android phones into immediate POS accepting devices. Contactless therefore becomes even more relevant because your paying consumer is either a Aadhaar or is a card customer. You may not even have a mobile phone. So I think that's the lesson. I hope next time around when we are stuck with such a situation, we are not doing at cash outs in the economy.
Okay, sure, Nalin sir. So, Nalin sir, another question for you is: recently there's been an announcement that NPCI is looking to go global. They've done an excellent job in India. UPI seems to have, I think, the largest transacting faster payments kind of scheme in the world. In fact, we've also seen cross-border flows to India are pretty large. So just wanted to know what is NPCI's role on the international front, and also how does NPCI facilitate cross-border flows either inwards or outwards from the last mile, or moving them out. Just wanted to understand what are views there and roles that NPCI could play in this space.
Yeah. So I think this has been a ask from the market. I think for NPCI we've always been very focused towards solving the problems internally. There's still a lot of stuff to be done, and I think all of us are always focused on looking at some segment of the market here and there. But this need has been there for such a long time. A lot of countries had written to us, demands have come to us in terms of what are we doing, and if we can take our solutions to those markets. And I think the our initiative started from those requests, and we said let's just first start looking at corridors where it makes it is more relevant for the Indians. So, for example, you can look at Gulf, you can look at Southeast Asia. So, countries and markets, corridors which are relevant for the country, for the Indians. And if we can take our extension, extend our products there. So, whether it's UPI or it is the RuPay card, the offline portion of the RuPay card, and things like those. And so it is so much to say that you're able to extend your domestic payment mode into some of the other countries, and you continue build that over a period of time. That's number one. And number two, if local schemes in those countries, if government organization in those countries would like to adopt NPCI payment instruments, then we can help initiate like a product excellence center for them. They can onboard their banks and they can onboard their customers, and they can use NPCI developed payment products. So I think the intention is to extend the usage of what we've built. That's the primary intent, and and make it more relevant from an international point of view. Uh, it's going to be a long haul. I don't think we intend to do this like overnight in terms of how we build it. But yeah, I think the strategic intent is to extend our payment network.
Okay, thank you, Nalin sir. Yeah, so maybe now I can maybe come over to Deep. Deep, from in terms of your experience on with PhonePe, there are a lot of players out there trying to acquire a large set of customers, especially on the payments app side. So just wanted to know that what is PhonePe's strategy? How does PhonePe try to differentiate itself from the market in terms of being able to acquire new customers and acquire new volumes and transaction flows, basically?
Sure. So Zubin, I'd like to marry this with the principle which we've followed right since our beginning. Right, we've followed a very simple principle of send, spend, manage, and grow, which is what ties in very closely with the consumer's own money journey. Right. So we started off with very simple use cases on P2P, which kind of rode on the UPI framework, simplified, no complexity, direct bank-to-bank P2P transfers. And then move to basic use cases around utility, bill payments, mobile recharges, etc. Graduated to enabling acceptance of PhonePe on online merchants, then offline organized merchants, and finally to offline unorganized or long tail merchants, right? This is basically helping consumers cover all the use cases they want to use their money for. And then we move towards the third area, which is management of the money. So management was through managing of the cards which the customer has, management of their bank accounts, checking balances through the UPI framework, etc. And we've very recently gone into the grow part, which is basically financial services, which is insurance, mutual funds, provide the right kind of products to the consumers, which will help them manage their needs at that part of the journey, right? So we've kept it very simple. We've not tried to complicate the customer's life by throwing a plethora of products and offerings. We've tried to marry the customer's journey with PhonePe's journey really well, and it's worked well for us. The customer experience is also something which we focused on and tried to keep very easy and simple to use on. So that's, I think, the mantra which we typically like to follow. And going forward as well, I think there are about 230 million registered users. So going forward, the idea is to hit the next wave of consumers who are probably not as internet savvy or smartphone savvy, and would want to really reach the 500 million sort of a goal going forward.
Okay. Well, another question, Deep, follow on is, well, of course, this is the customers and the app and the options they have to pay. Now, y'all I know are doing quite big, and I think Nalin did mention that a lot of efforts are going into acquire more merchants. and making these payment acceptance points a lot more vast in terms of onboarding them. And I suppose this has in the recent times there must have been a large demand to quickly onboard a very large set of these merchants, and some of them are pretty small, pretty basic merchants. So just any learnings or any things that other players can do from an expediting the onboarding process and making it a lot more at the same time compliant in terms of all needs requirements that need to get met, because when you onboard there is certain due diligence that needs to be done. At the same time, making it very quick and easy for a merchant to onboard. uh, just wanted to know, how does PhonePe manage it, and any lessons learned that can be shared with the audience?
Sure, Zubin. So, I think I'd like to categorize our merchants, and this is, I think, primarily the really small offline merchants we're talking about, right? So, these are the merchants who typically, and this has been a story of the last couple of decades, so say, where these merchants would be offered a POS machine with some sort of a monthly fee, some MDR, a T+1 settlement, all of that stuff, with a requirement of KYC, etc. Right? I think UPI solved that really well. UPI solved the P2P framework of onboarding merchants very well. And that is something which we followed in terms of onboarding merchants. So when you want to bring in the real micro and real small kind of merchants on board, you need to solve for their three pain points. Number one is around getting the money in real time or near real time. Getting access to accepting a digital payment mechanism in a very simple, seamless manner, without really getting into too many hassles around KYC, and not really having to pay too much for it, because this is what they compare with for cash, right? So I think UPI P2P mode is a simple way to do that. Enables merchants to quickly get onboarded without the need for really submitting too many KYC documents. The mechanism to make the payment is QR, simple QR, which can be stuck on the merchant's till, and the settlement is real time because it is on the P2P rails, and since it is on the P2P rails, there is no question of any NDR or anything else which comes in. Right, so this is the process which we followed, has helped us acquire a very large scale merchant base. A lot of it is powered by about 7,000 plus fleet on street which we have, and they help onboard these merchants really quickly. And again, the aspect which I mentioned about simplicity earlier is applicable here as well. We just try to keep it very simple for the merchant, and things work very well.
Okay. So I think that brings me on to one question, and I think this is something that maybe a lot more panelists can answer is, we know with the recent regulations, the margins being made on payments is really squeezed and at times made almost zero. And I'm not going to question whether it's right or wrong and all of that. But my question is, what are the new ways in which or new different business models that we believe can emerge to be able to run with something like a zero MDR? Or what are the different business models and revenue models that can be built around payment transactions with this scenario in place? I understand that the industry necessarily is not too happy with it. There are a lot of lobbying going on to maybe see how that can be improved or made better from zero. But I'm parking that aside. I just want to say that what are the new innovative business models that could emerge, that whether it's moving to adjacencies, and you mentioned something about moving to growth as a category, and I think suppose some of the answers lie there. We just wanted to hear your views, Deep, from your side, and Nalin or Sachin, anybody else wants to answer along with Kashinath. Yeah.
So I'll quickly answer that. I think zero MDR is obviously not something which we support, and we've made public statements about that as well. I think the idea is to right now focus on building the acceptance, with the hope that in the future there will be some logical capability to charge for the transactions. because that basically helps fuel further investment, both in terms of technology and people, and growth, right? Um, Other than that, obviously, providing maybe value-added services is one of the areas which we can look at. But I think right now, the need is to really expand the coverage, which Nalin was also mentioning earlier, right? I think that exactly is the need right now, and we are all focusing towards that, especially going towards tier 4, 5, 6 kind of cities. Right now, we are seeing about 65% plus of our transactions coming from tier 2, 3 cities. So hopefully we can go deeper down and actually get in a larger merchant coverage in the immediate future. In terms of monetization, I think the forum is open. Would love to hear from others as well.
Any views,
Yeah,
Nalin sir or Sachin, on
yeah, yeah. So, Zubin,
how else could players monetize? Uh, Assuming that zero MDR is here to stay, let's not debate that. Let's see how what are the different models that can emerge.
I think, to be honest, Zubin, this is. I think there has been a lot of conversation around it. It's been now 8 months into the zero MDR regime. We've all survived, so nothing has gone down. And I also believe that frankly, I think we all have views, but broadly the industry feels, and we are of the same view that there needs to be a certain cost, coverage to the transaction that gets conducted. It covers the cost for everybody in the ecosystem. Of course, it should, having a very large portion of MDR also is not I think the right pricing policy for this country at least. But yes, there needs to be certain I would say incentive for everybody to remain very active. Having said that, I think it is people are started realizing, because in an adversity you start looking at some new business models. So I think it has prompted all of us to start looking at what more can we do with payments that we are doing today. And we hear, right? So we hear how acquirers are moving towards building business applications for the merchants. We heard so many now entering into the space, including PhonePe itself, and then there is Paytm. There's so many people who are building this merchant business applications, Khata Book, and so many are there. So I think that's one area. The other area, I think they're also looking at monetizing the merchant base in terms of providing them credit, and then providing them certain financial services. So that's another area. And of course, as we all understand, that the amount of the digital companies getting into the payment space, everybody seeming to get into a pie of what payments are. So all the large 3 4 big techies across the globe, I think the whole payment leg is a very strong input into somebody's identity, right? And his persona. So to make their prediction models more accurate, this is the missing link, and I think that's the power we have. If we can be the provider of that missing link, there is a possibility for us to make some money there. So I think these are the so while I think Lyle will continue to advocate for a certain amount of cost, I would say certain amount of MDR or certain amount of monetary compensation. We also will have to continuously look at some of these new associated applications. I will add one more point, and I think that was something we briefly discussed, was the transit part, right? So transit ecosystem is one very smart example of this. It's a very low cost, low value payment system, and the larger value in transit payment is the AFC system, the automatic fare collection, the billing system that you create. And that's where the operators are willing to make or pay or give more output in terms of paying out to the vendors and paying out to their tech service providers rather than the payment itself. So I just believe, just feel that there are these examples that we can look, next to us, which will tell us where is that we can make more money with payments. So I guess that's the way forward for all of us.
Okay, sure. Thank you, Nalin sir. So maybe I'll move the
Yeah.
focus now
So
to go ahead,
yeah.
Kashinath
So
sir.
I guess my take on that is that you see this is the cost coming down, or the prices coming down is a sign of maturity of any industry. You take mobile phones, internet tariff, or even for example flat screen TV, or automobiles, or any category. If you see, that's pretty much the price maturity cycle that happens. So I think it's one sign that this product category has also reached its price maturity equation, and it's here to stay in terms of not being remunerative on the transaction itself. But I guess, as explained by Nalin, and also by other co-panelists, I think the important thing to note is the kind of footprints which payments create, the kind of sketch it creates about an individual. It's all about the data sets, the footprints that are getting left, that lends itself to huge amount of monetization. And I guess I think that's the whole that's the whole game out there. You will not make money from payments, but you will make money off payments, and that's where the whole innovation is going with respect to analytics. And if you see digital lending, or any other kind of overlay on the payment space that's coming up, I think that's where the value of payments will get generated, and not per se for the act of doing a payment that you earn a money. It wouldn't be there. It's like saying that maybe sometime in the past, uh, you know when you go and exchange a currency note for a good in a shop, uh, there is no MDR out there. I mean, a 500 rupee note is a 500 rupee note. Uh, However, it is the cost is invisible, because somewhere down the line the banker, or somebody else bears it. RBI or the government kind of bears it. So there is a cost, but it is somewhere in the background. Uh, the talk about all of this payments remuneration is coming up because digital payments lends itself to specificity. So there is a particular transaction which can be documented. It's at a point in time. There is a particular event taking place. It is cognizant, notable, and in that you are not making money in that transaction. So, I guess this is the new normal, and as Nalin very clearly explained, the whole thing is about developing the data sets, and building models to use the data sets to fillip, give a fillip to the revenue. I think that's where the money is.
Okay, so Kashinath, so I get what you're saying. You said basically the data monetization piece to either upsell, cross-sell, provide new services is where the revenue should lie from. Fair enough. I
Yes,
think
absolutely.
that brings me to my next question, and I understand that you also head up the innovations at your bank, and just wanted to hear any disruptive innovations that we can see that are really pushing towards the cashless or digitizing flows that earlier per se were more cash, and now we're getting more digitized. You could also borrow, I don't know, I mean, there is a lot of talk around blockchains. I know a lot of people have tried and done POCs. Maybe it has applications in the trade or the supply chain side, but just wanted to hear your views. Have you come across innovative use cases that you see uses this technology? And barring blockchain, if anything else stands out as really good solutions that your bank is today using with some of your clients to be able to digitize some of these payment flows. Happy to hear any thoughts or views on that.
Yeah. So, see, I think I will not talk specifically about the bank,
Yeah.
but suffice to say that payment is an orchestration process which involves multiple parties, and it needs a synchronization, and there are too many moving parts in terms of the settlement, and all of that. So the innovation, largely, you see, most of the basic infrastructure innovation has been done brilliantly by NPCI in terms of either the real-time payments through IMPS or or the UPI and so on and so forth. So now with NEFT and RTGS also being 24/7, I guess in terms of the payment rail architecture, India is perhaps the best. I think Nalin can vouch for this. I guess we will perhaps be the best across the world without a doubt. Where even RTGS, NEFT, IMPS, UPI, and all other basic payments services are kind of literally 24/7 now. Even you can register a NACH mandate today pretty much online and through your Aadhaar authentication or through your net banking and debit card authentication, you can register a mandate and give it to a loan provider for you to set up, your EMIs. I mean, I guess these are innovations which are really, I would say, earth-shattering. I was in a conference, Cybos, in London last year, and a couple of years back in Singapore as well, and people were waking up to the smell of real-time payments. So I said, "Hey, look, you come to India, and then you talk about real-time payments. NPCI has done this, dusted it, and then we are like kind of gone far." So I guess that's one innovation which has already taken place. So the question to ask is, what now? Now the what now question, somewhere it will, it is a combination of process as well as technology. So let me explain on the process part or the behavior part. So in order for us to digitize the payments, I guess you know it is something like garbage in, garbage out. So if the input to the payment is coming in cash, then the output also will be that much cash. So the first and foremost, to the input has to get reduced by cash. By that, what I mean is that salary payments in the organized sector is pretty much non-cash today. Uh, but in the unorganized sector, is where a lot of cash gets withdrawn and gets generated. So a lot of government payments today are digital, but as Nalin rightly explained, it got encashed, and then again, the whole objective of digital payments got truncated much sooner than it should have. So at the first instance of received, it got cashed, and then it again the cash coming back to the currency. So I guess there has to be a lot of process and customer efforts in educating that the value of having the cash in digital. And in order for us to do this, one of the things that could explain what Nalin said in terms of quick conversion was that people are apprehensive whether this will work in the time of 12 o'clock in the night, whether if I need that money, will this whole damn thing work? Will the यहाँ तो एयरटेल का सिग्नल या मतलब कोई भी सर्विस प्रोवाइडर का सिग्नल नहीं आता है, तो internet is unstable, so will I be able to buy my child something when he's hungry? Can I rely on it? So that confidence level is not there, and hence people go and cash it and keep it. I mean, that's pretty much behavior part of the story. So one of the things in terms of process is to give assurance that while we develop the acceptance architecture, we spoke about it, we should also develop the cash and encashment architecture so that people are assured, okay, anytime you need cash 24/7, you can go and withdraw, whether it is AEPS or any other kind of micro ATM or any such things. So that confidence level has to be built. That's how people will start keeping their money in digital. Okay, so that they will pay digital. See, that's what garbage in, garbage out is happening there. So that's one thing. Now, second thing I would tend to think is, and this is a long shot innovation, and you talked about blockchain. Uh, so I guess there are use cases of blockchain where say, for example, if the government starts dispersing the entire grants and monies and doles and incentives at DBT in digital currency. I mean, say they try to happen. So then uh, you know that will create a whole new cascade of digitization of payments. So the spends will then go digitally, and the government can perhaps not only the government, any issuing authority can look at how the payments are flowing and monitoring our end purpose and so on and so forth. So an innovation on the blockchain front would definitely dramatically uplift the cost of digital payment. But yes, even with a basic digital payment architecture, we are struggling at maybe 15-20% of the overall population using digital payment. So I guess there is a way ahead for it, but technology wise, the solution appears to be somewhere in the blockchain. But otherwise, I would tend to think that no major significant development in payment technology is required to crack the digitization. Now it is more the customer behavior, the process, the acceptance architecture. I mean, that's really what I feel. Tech will not solve the problem from here on. Is my proposition.
Okay, thanks, Kashinath sir. And I think I'll echo your thoughts on, NPCI do an excellent job, because we as consultants, I know we always, and I do work with the international firms, they all reach out to us and they all want to know about how does payments work in India and what's UPI and all of that. So they're all enamored by it. And I think they've really done an excellent job there. Not just UPI, I mean, even IMPS, even PBPS, I mean, all of these solutions are really apt for the Indian market. I think they've done a good job there. Great for that. Sachin, I'll move on to you for the last set of questions, and then maybe we'll have one last round. Well, of course, we understand that, you provide new age neo-banking tech, and I'm guessing a lot of your clients would have upped their need right now, given there's a lot of focus towards digitization. So any thought process on that? And also a second corollary question would be that, there's always a balance between, security, fraud, and customer convenience. And what do you have solutions, and how do you manage that with some of your clients' needs and asks?
Yeah, I mean, so technology is something that we at Zeta feel very, very passionate about. I think it's extremely important that the industry and specifically, banks sort of address the legacy tech versus the modern tech, conundrum quickly. I think the fact is that the current banking, or majority of the current banking technology stacks are, really relics from another era. I mean, there's no other, way to put it. They're really, really inflexible, right? And they've been built 20, 25 years back on mainframes, monolithic architectures, written in archaic languages, and are really not built to create the kind of experiences that modern customers demand and deserve. I mean, as a product manager at a bank, I've been through this myself, right? So not only do new product launches and change requests, for example, take time, very often what gets delivered at the end of the cycle is vastly inferior to what was envisaged at first. Right? And then we talk about a couple of sort of related problems, right? And this is something that we deal with day in and day out in our conversations with banks. So most of us who've been associated with banks would know that the existing banking technology stacks are basically a composition of multiple different service providers, right? So someone will provide you with a core banking system, someone else will deploy a payment switch, a third vendor would come and deploy a card management system, and then basically there'll be one other vendor which will come and stitch up a mobile app for you, right? So this khichdi of a system is heavily bandaged and duct taped together, and that really inhibits scale, that inhibits time to market, and of course it sort of limits the kind of experiences that you can provide. The reason why a lot of us believe that Apple sets the benchmark on design and experience is partly because they control every single component of their stack, right from the operating system to the hardware components to the physical chipsets, etc. Upgrade cycles on legacy systems happen every 2 to 3 years. I mean, can you imagine your Apple or Google or Microsoft sort of software scheduling an upgrade after 3 years? If it's unheard of in the new software world, why should it be different in the banking world? And the last problem I want to talk about is that of scalability. And today the large e-com sort of retailers have taken live their festive season sales, right? And year after year we see this happen, and I'm sure sort of Nalin can corroborate this. Is that when we see peak volumes, issuer systems experience frequent downtimes, and that's only because these systems really haven't been architected for scale. So what I'm trying to say is that, again, from a retail perspective, just digitizing an onboarding process is not enough, right? You can, we have this thing internally where we say that you can add a Tesla, shell to a really old car, it doesn't become a Tesla. That the underlying plumbing needs to be fixed. And so we at Zeta really think of technology from a first principles basis. We think that the next wave of growth will be driven by technology stacks that are composite, that are end-to-end, that are mobile first, API friendly, cloud native, and really based on loosely coupled microservices that could give banks and other participants the freedom to build world-class experiences at the same time being elastically scalable. Right? And I think that sort of fundamental shift in thinking is important. You need to think like a technology-led bank now more than ever, as opposed to a bank who also has technology, right? And the analogy that we often quote is that of a Barnes and Noble sort of a brick and mortar bookshop that goes digital versus an Amazon, which is inherently a tech company selling books. The experience that customers get is vastly different, right? And I think the good part is, I think we've realized that the industry has taken cognizance of this, and some of the largest banks are actually modernizing. So it's a real sort of a positive. To answer the second part of your question, I think where you basically were saying that is security and frictionless experiences, do they need to be at loggerheads? Right? I think that was your question. I think it's a misconception, right? So security has to, in fact, be seen as an enhancement of the overall sort of payment experience and not really a barrier, right? And I'll give you an example there. Think about the way you do an e-commerce transaction today. Right? RBI mandates two-factor authentication on card, largely driven through SMS OTP in India as the second factor. Now we all know that OTP creates friction. There are issues of latency and non-delivery of the SMS OTP. However, EMVCo has come out with a protocol a couple of years back. Actually, it's known as the EMV 3DS protocol, and it offers risk-based authentication. Now the issuer has 10x more information about the customer. They have device context, they have behavioral context, merchant context. So very, very rich information for the issuer to make a far more informed decision without having to run, an SMS OTP challenge for every customer, right? So it's actually security that is really enhancing the experience, or potentially could enhance the experience. And then you add to that stuff like behavioral biometrics, AI and ML based scoring. All of these are designed to make transactions seamless, yet secure. The other example is that of tokenization, right? We've seen a few banks actually launch tokenization in India. Samsung Pay is live, Google Pay is live. It not just devalues data, but it also creates a great sort of experience, or potentially a great experience for the customer. And at Zeta, one of our pillars is how we do effective risk-based authentication, AI and ML scoring on our fraud and risk engine. So it's sort of central to the way we think about business, and central to the way we think about modernizing technology and stacks.
Okay, sure, Sachin. I'd just like to thank. Sorry, I think Nalin, you want to say something?
Yeah, I just want to add to that. So many times we get caught up into what's new that you want to do, the new stuff, the new feature, the new technology, the new functionality. But I think the one learning that we've had in the COVID scenario is about building capacity and capability. And I think that's super important. I think that's something that we've learned, and we've been seeing this. And I can bring an example from my telecom days. Diwali used to be some festival used to be such a challenge when you want to send greetings to people, and they could never solve this problem. You every time you want to send an SMS, your network will get choked. When you want to make a phone call, your network will get choked. And eventually WhatsApp came and took away that game. So the problem got away, but also did the business. So unless we solve this problem and we don't realize this, I think somebody will take away this game from us. So I think that's important to understand.
Sure. Thanks, Nalin. So I think it's been an excellent panel, and I think we've got a lot of insights from everyone. And I'd like to thank each one of you for all sharing your time and all the insights that you give. Maybe just a quick one-liner from all of you, and that will kind of wrap up the session. Maybe Nalin sir, any your key takeaways from this session? Just any one-liner, and then we'll move on with Kashinath sir and then Sachin.
Yeah, so I think I just kind of shared my bit from the COVID experience, and then maybe just to add to that, the breadth that we've seen now. I think everybody spoke about it. Sachin spoke about it. Kashinath spoke about it. The breadth that we have managed to capture. I think we should start from all the analysis that we can do. If we can ensure that we can keep that sustained and not let that drop, is the important part. If we allow it to drop, then we'll be almost like the post-demon state when the economy went back to cash. And we can't let that happen. So I think we have to keep it sustained, keep it engaged somehow. That's very important.
Okay. Kashinath sir, for you.
Yeah, so I think the payments in India have already become fast, simple, secure, and I would say economical and cheap. All that has been done. Uh, Now the impetus on the payment leaders is to ensure the continuation of adoption of digital in, and so that the digital out also happens. So that's largely the mantle of responsibility which the pay tech leaders have to kind of take to make this dream of further digitization.
Okay, thank you. Sachin, last comments from you.
Yeah, I mean, I think honestly, India is well on track to see the next wave of growth on digital payments. I think the industry needs to do more of the same, but maybe do it a little differently. The realization that what's got us here may not take us to where we want to be, and so I think all stakeholders need to sort of come together and think of infrastructure, think of technology, and think of creating enough awareness in both the consumer and the merchant community to really set India on an accelerated growth path.
Okay, thanks, Sachin. So thank you again, everyone, and maybe I can hand it over back to the host.